What's happening, everybody? I hope you all had a fantastic weekend. I hope you guys have had a great summer so far. I know it's been a while since I've been on. We've got a Sunday video for July 15th and the week ahead. I've been spending a lot of time up at in Maine at the beach, and I've talked about goals the last couple of times that I've been on, and this is finally the year that I've actually done it with a little bit of help. But got there, and it's very hard to unwind, habits and things that you've been doing for 15 or 20 years. So hopefully you guys have been enjoying or continuing to enjoy. There's been some great feedback, bringing rotation of guys, different people that pop on scan. Each year I like to do a big challenge leading into Traders for a Cause. So hopefully you've already, secured your Traders for a Cause ticket. But if you want to do more, Zach Mullen, my trainer, and Avidity Fitness, each year we do a challenge, and usually we get maybe 25, 30 people to kind of jump on. But basically, if you commit and you do 18 out of 24 sessions, the next 6 weeks, it's 4 times a week. If you do 18 out of 24 of those sessions, you're going to have a chance to get a Traders for a Cause ticket, annual Investors Underground membership, as well as one member will get 1 month of Icon meals, another will get 2 weeks of Icon meals, and then you'll also get IU Avidity and Icon swag. So this is something that's been popular in the past, but everybody that does do 18 out of 24 sessions, I will be donating $500 to Traders for a Cause, just for you showing up and being consistent. There is a sign up form on the blog post, so if you guys are interested, please do sign up. It'll have email and contact information, and then Zach will be in touch. That starts July 18th. Typically, it is Saturday and Sunday, 9-10 a.m. because he has an in-group that ends right at 9, or in-person rather, group that ends right at 9, and then Tuesday and Thursday at 6 p.m. Eastern time. So hopefully, if you guys need a little kick in the butt or motivation to show up, like I said, $500 to Traders for a Cause for everybody that does actually do it. And you'll also be in better shape at the end of it. So anyway, moving on, stock related stuff. Prediction, small cap summer. I thought we were going to have a major small cap summer. So far, it has not disappointed. It is getting hotter and hotter and hotter every single week with opportunity. And then it kind of parlays into the bigger caps. And, when big caps trade like small caps, when you've got Tesla kind of overextensions, SOUN, you've got, what was the recent one? SOUN, I said Rivian, Lucid was the one I was going for. Lucid, pretty big, extension so far relative to how it's been trading. Obviously, IWM has been breaking out, which it has not broken out for quite some time. So speculation is at a yearly high, probably a couple year high, where everybody's just starting to chase everything, and they're starting to go for the smaller cap type, mid cap type names, and starting to run those up as well. So I always love that because when you can size into things like SOUN or Rivian or Lucid, you don't have to worry about those crazy dip and rip type traps on these 1 million, 2 million share float names, where it's very hard these days to get ridiculous conviction, because it could be the end of you, right? It could go circuit to circuit to circuit, something you weren't even planning for, and you end up in a bad spot. So just for me, I'm hoping that it keeps going how it is. And I realize not everybody can perform in these types of markets. I personally have taken I took a step back for quite some time, trying to check those boxes that I've been talking about. It was more like a force break. And, when I said I was trading small, I was trading small. I had wired down and I kept my accounts relatively small, just to try to finally actually take some time off and rebalance my life, rebalance everything with kids, wife, and business, etc. So that said, there's pros and cons with that. And, it started to get a little frustrating. I actually went on a bachelor party right when GME and AMC started to go, absolutely crazy, as well as FFIE. And that weekend, I was like, you know what? Or actually, it was like that Friday, but I wired in. And I was like, no more, no more baby steps, no more babysitting. I'm gonna be back to trading the way that I did, and figure out the balance from there. So far, I've kept that balance, and it was the best decision I made. There's a lot of FOMO that goes along, not having enough buying power to make the decisions you want. Personally, for me, I'm a day trader. I'm not swing trading a ton of stocks, right? So I don't need major account size, but I do need enough to make those big moves when GME is happening, when AMC is happening, when NVIDIA is happening, when Tesla's happening, right? And so for me, it was a little bit of a forced break just to kind of check off those boxes. But now I think I've been doing pretty well with it. And, I've spent the least amount of time at my desk. Most of the P&L has been coming between maybe like 8:30, 8 a.m. to maybe 11 a.m., maybe noon latest. But for most days, if I had a good morning, I'm off desk by 10:30, 11. I'll come back, check things out, make sure that I know what's going on in the market. But it's finally, finally balanced out. And I'm pretty happy that I resized back up, because just the opportunities lately have been endless. And so anyway, that's that. Hopefully you guys have noticed, that, I could just, not show up, not do any of this kind of stuff. I'm reinvesting in the community. I'm trying. We're putting out some fantastic interviews. I hope you guys saw. We did Stock B, which took off pretty well, and then this Moist Mango interview. Nice guy. He's actually coming to Traders for Cause. I'm excited for that. Just these guys. He's from New Zealand, and just he's coming out to Vegas for the first time and starts to meet all the people that he trades with. So yes, I am excited about that. Just like when Christian Kulamagi came, as well as all these other traders that you've had good experiences with, and helpful and nice guys that you meet online. So anyway, like I said, this is all about, I'm just trying to, not only reinvest in getting people's stories out there and sharing knowledge, but also, tools. We've created a lot of tools at Investors Underground. Personally, for me, I no longer use any other scanning services. And, pre-market is all covered with the pre-market, custom pre-market scanning list. Intraday is covered with the high day and low day list. And I know we absolutely suck at showcasing all the features that we have. And I need to improve on that. But at the same time, I'm trying to juggle that balance, and I just don't have it in me to make all these videos to showcase, some of the stuff we have. So as you guys have probably seen, we had a nice opportunity this last week for you guys to check out what IU is all about, but and sort of like what the new IU is all about, really. But hopefully it doesn't go unnoticed. Hopefully you guys do see, how much, the improvement, and kind of reinvesting in something that is no longer, required for me, or just like one person. It's more community driven. It's more tech driven, and you name it. So anyway, A+ setups recently. We've had NVIDIA on the overextension again. Kind of knowing, CPI, when it's around the corner, or say an FOMC meeting, things like that. When do these overextensions, parabolic kind of moves line up with, a situation like that? And staying aware of that, being aware of it, is where you start to get these, outlier opportunities. So obviously I sold the NVIDIA puts too soon. Those all went like 1,000+%, but you saw Tesla short, as well as the puts on that. And then we've had SPY recently with some big overextensions. Zero dated options is not something that I trade all the time. It is special situations. And we've had a lot of those lately. So that's been good. It's been good for the Roth IRA, which I'll get into in a few. But another one that I personally missed was Tesla off the open Friday. But for me, that was a no-brainer. And it was the first thing I said when I jumped in the room on Monday, or excuse me, Friday, was ideally a flush and a rebound. And, any of those calls, those were all, 5, 8, 10x, off the opening flush. And that was a big fumble by me, unfortunately. One popular one that I know people have been asking about, I got asked about it and responded to it on Twitter, was this IVP. And IVP, it's confusing for a lot of people just because maybe they haven't seen, something like this for a while, but they look at it and they say, oh man, it just raised at, $1 or whatever. This makes no sense. It's 6 times higher than, where they raised and this and that. But, I would challenge that if you saw this couple million float type name, forget the raise for a minute, but you wouldn't be so biased, right? And you wouldn't carry such a bias. Right now, that bias is coming from this pricing of $1. But the reality is either one, they didn't sell it, or two, it got absorbed, right? And this was probably the most anticipated offering. And what I mean by that, I'm not going back and saying it was so easy, you could have nailed this or that. But what I'm saying is there was S1As for days, right? So they get the S1 and then they amend it. And you know that they're getting closer and closer and closer to pulling off that raise. There are some markets where they do these lethal offerings with some crazy warrants and then series A, B, C, all the way down to Z warrants. And then there's other cleaner raises and offerings. And then there's other ones where, there was no float to begin with. And this is sort of like the new beginning, the new birth of this particular stock. It got cleaned up down 99%. It's got no float. They raise, 6 million shares, whatever. And then that's it. That's the float, right? And so everybody can't wrap their head around that. And so what's happening is we're getting that T1, people still aren't used to that T1 kind of squeeze, usually had an extra day. So it catches people by surprise. And when you have those S1As for days, the amendments, it becomes more and more and more obvious that they are going to raise. That does not mean it's a home run, right? This is an outlier response to an offering. But what it means is that people are going to be anticipating that offering. People are going to be there wanting to get a piece of that. If it doesn't go down, they didn't get their exit. And then they were never given an exit. They started to rip up from there and continue to trap and then become a perpetual squeezer. What is a perpetual squeezer, right? We saw it on Zap recently, that swing trade. We saw it on CSLR. We saw it on all the ones, and I'll go through that next, with some of these liquidity traps that I've gone over. What happens is you get that morning move and then shorts win, but the overall shorts, the swing shorts, never got out. So now you have new shorts that added plus the swing shorts compounding that move. Then repeat next day, lets the shorts win. Guess what? Now you have 2 sets of shorts stuck plus the new shorts, and we start to have that outlier move. We saw that on Zap recently. Most of you guys should be familiar with that. That was a swing trade, and it was a rather good one. So this was the liquidity trap that we went over. Anybody that watched my last couple Sunday videos, I know I haven't done a ton of them, but obviously it's been in scan every single day, as well as an own swing. And yes, it was a good trade. Yes, I completely minimized compared to obviously where it went. I felt like I did pretty well. I made it bulk size to maybe this day right over here. Mostly this July 5th and July 8th, but did hold smaller shares, but about 10% of what I had. And, there's that back and forth of, is it smart to hold size the entire time, or does the likelihood of it tanking go up each day that it's higher and higher and higher? And so you got to kind of find that happy medium. I'm not mad that I sold too many too soon, but at the same time, it would have been nice, obviously, to appreciate that full upside. But either way, great liquidity trap. And then again, we had one. Then again, the volume starts to go, and you can see these wicks when they kind of fade off. There's no reason for shorts to cover, right? It's weak close, weak close, weak close. It does that 2-3 times in a row. And then guess what? It breaks back up over those highs, which if I put a line right over here, it kind of starts to become obvious. Now dip back up over those prior highs over here, which was about 385. And then it never looked, back after that. So I think this has been a fantastic one where if you guys had checked out the comparisons I made when I originally had tweeted it, This was the first comparison that I had made, and you can kind of see the same volume comes back, and then the volume the second day, secondary liquidity trap, and then AISP, same kind of situation here. So that was the comparison given on this day right over here on the initial swing trade. And it should look a lot like these HWH. You can see this kind of move over here, as well as later on it did it again, and you can see the volume over here associated, and then breaks out this day. You saw the same thing on CSLR, which was another swing trade for me, and hopefully you guys were able to participate in a good way there. But you're starting to see the same thing over and over, and this is why I do these videos. This is why I continually post sort of the same thing, so you can reverse engineer it, and kind of make comparisons as to what were the similarities between all these names that I took. Are all of them going to work? No. The answer is obviously no. But the point is what are the similarities and how can you prepare for that? It's no different than something like LPA on Friday. Ticker recognition, right? No one should have forgotten this LPA name, right? We all know that it went to $500 per share. It was way low volume, went crazy, and then it's been kind of dead since. However, now we have a very FOMO excitable market. We just had Zap doing 1,500, 200, 2,000%. We had SNGX doing 1,000%. We had all these tickers going crazy. So FOMO is super, super high. So when something starts to go, people, are going to jump on it. And if you can come back to it real quick and be like, oh yeah, LPA was the one that did this or that, and remember before other people remember, you're going to have a really good trade. So that LPA, for example, ticker recognitions, where have I seen this before, or how has this traded before? This LPA trade that I took on Friday, I wasn't first. I just joined it, flushed it. It started to hold the trend. And for me, it's a good risk reward, because if it's not going down, at some point people are going to start to remember, oh, this is the one that went to 400, 500. What if it goes even 10% of that or 5% of that? You're already at 20, 25 or $40. So that was a really good example of, kind of where have I seen this before? These are all kind of things that you guys can prepare for, whether or not you've seen this setup before. So in the case of Zap, right, we look at OCEA and we look at AISP, right? That is sort of pattern recognition. Where have you seen it before? And whereas this LPA is ticker recognition, right? You know the history. You've seen how it can react before. You know the stock's personality. So those two things, being able to quickly kind of identify, is this a pattern I've seen before, or is this a name that everybody remembers? The faster you can process that, the better trades you can make quicker, right? The better decisions you can make quicker. And I think that's something really important for you guys to, at least realize, because most people, are late and late to kind of identifying that. And the way that you learn that kind of stuff is by going back through. I personally am a visual learner. That's why I always post, on X, I try to post, the trades of the day, the big opportunities, because you know what? The next time I see that ticker running, I can just search my feed and look at how I traded it last time. It was a banger trade. Let me go look back to see how it reacted, what the personality was, right? And so I do that publicly. But what you can do also is through Notion or Discord or whatever, you can create your own kind of database to be able to go back and see, these stocks' personality. So just keep that in mind, that, a lot of people, I've been kind of highlighting some people, even like Moist Mango, that's been doing some ridiculously good, trade recaps, or this other guy who's got a great name. His name's Nathan on Twitter. He shared a Notion kind of, report cards and trade reviews and everything, which I think is extremely important. But also being able to save those charts, to quickly going back to being able to see how they reacted in the past, is an edge. It's you have to do it, and by saving charts and doing that kind of stuff, if you are not in front of the desk 24/7 like I have been for 15 or 20 years. That's why my pattern recognition or ticker recognition is so good and so fast, and pretty much like a photographic memory. But as I start to pull off desk more, my sort of journaling slash kind of maybe saving how these stocks move is going to be more and more important if I want to keep that edge, right? So you're either going to have the edge by doing what I did for 15 or 20 years, sitting at the desk 24/7, or you need to take good notes. And the thing is taking good notes is a lot of work, and most people are too lazy to do it. So if you don't do it, that's fine, but don't complain that somebody else is nailing the trades and you just can't wrap your head around the how, right? They put in the work, you didn't. So we'll get into Scan in a minute, but Roth IRA, I've said this before, I've said it again. I got Jack to open. Jack was in my office, I don't know, it was a year ago now. And we talked about, Roth IRAs because he had a traditional and I was like, you need to convert it. You really should convert it. And then it was like a month gone by. He hadn't done it. I'm like, you're only hurting yourself, right? Because the next hot cycle, the next like big move, the next 1,000%, kind of runner is going to bring all those easy money kind of trades. The hardest part about an IRA is building that up, right? You can only put in so much unless you have it from the job. You can bet, you can convert it and do it yourself. But for most people, you got to start small. So you need to be able to take advantage of a really, really hot market. So as I've said before, anytime you've got, a GME or, FFIE style market, the next 2 weeks are going to be your hottest 2 weeks, right? And then the next cycle, it starts to fade off. And then the next 1,000% runner like Zap, then you get nice 2 weeks and then starts to fade off. So that is how you build your Roth IRA so that you can then, make more better investment kind of decisions later. But when it's small, you can only do so much. And the most important thing is building it as fast as you can. And there are only certain markets that you can take, these smaller accounts and turn them into bigger ones. So it's been a good run, and that's also where I've been doing most of the options trades that you have seen me entering. So one thing though, I will remind everybody is, you have to know when to pull back, right? And even same thing with Zap. Zap was a huge trade. CSLR was a huge trade. And same thing with AP. AP, anybody that's been paying even half attention, this was the latest swing trade that I had posted. And the main reason I was actually interested in it, it ramped up and it actually basically took off the open and then slammed right back down. And it was actually this one there over here. And that's when I first actually was interested in it, because it ramped up so hard and then it slammed down, but then they still soaked it. So basically I was getting long versus one, and my average was 111. And as I said, I was swinging it. I sold about 2/3 so far. I'm riding the rest. But, again, the thought process is you have this huge stuff move, slams down. What happens next is the most important part. And just absorbed. Every time it swiped up, slammed down, they still absorbed it. So to me, they let shorts win. They let shorts kind of dig their own grave while they accumulate. But each time it starts to go, it's thin. But meanwhile, they're not chasing it. They're letting people kind of come back and soaking it until they finally let it go. So we'll see what happens. But again, I've locked in 2/3 so far. Pretty nice opportunity regardless, but pretty clear swing trade there. And, again, the last thing before I get into Scan for the week ahead is just kind of going through, I put some failed follow through setups in Scan. So if you guys are interested, you can go back and kind of just draw lines and see how you could have traded these better, and what you should look for, and kind of giving yourself a little bit of leeway over certain key areas where it starts to peak out. And then you want to see it kind of push out. The more it trades over these key levels, the better, before it ends up kind of fading off and giving you the trade that you're looking for. Most people are too afraid that they're going to miss the move. But when you have such big range, you don't need to have that fear. You're going to have plenty of downside. And I repeat myself a lot on this. Be on the same side as sellers, right? You don't want to be competing for the best entry on the short side, because what if there aren't any sellers, right? You want to be competing for the best entries against sellers, because you're not going to fill. It's going to keep on going down, 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 down. That means you're on the right side, right? That means you're onto something. So not having enough means, you're on the right side. But you can see the same kind of stuff. NAS, we've talked a lot about, high day clear out type moves and things like that. I feel like a lot of people, put themselves up against the same areas of risk as everybody else. So what happens is everybody stopping out at the same time, exhaust happens, fails to follow through, and you're exhausted from the trade, right? So you got to behave on the front side of the trade. We had the same thing, RNLX, and this is the last one I'll go over. You guys can go through the rest if you're interested. But you can kind of see, same kind of situation over here where, 56 becomes sort of a key level, and, over here into the 60 range. So again, most people trying to figure it out into parabolics, but wait for it to kind of fade off under the 56, start to break under prior levels of support, 50, and then use that as your guide. Most people, and I wrote this on Scan this week, most people look at, this trade and they're like, I would have nailed that thing. I would have nailed that thing if I was at the desk. Or they look at this like, oh man, that was such an easy trade. I would have nailed it if I wasn't doing X, Y, or Z. And they leave it at that, right? But what I would challenge you guys to do is actually go back. Okay, so you would have nailed it. Sure. How would you have traded it? Where would your entries have been? What made it a good trade? How could you have traded it better if you did end up trading it some, but how could you trade it better? Most people don't go back. They just chalk it up as like, oh, that was easy in hindsight. I wish I would have done that, or I should have done this, or they have some sort of excuse as to why they missed it. And that could be anything. But few actually go back and reverse engineer, why was that such a great trade? So for example, Moist Mango just went over his NVIDIA trade, right? Why? Why was it on his radar? What made that such a great opportunity? Most people are like, yeah, whatever, you got lucky, yada, yada, yada. No. Why was he so focused on that, right? What made it such a big opportunity to be able to make that P&L? If you do that work and go back and review it for next time, you're going to be that much more prepared for when it sets up. And those are the things that can kind of change the trajectory on your career. It's not about, making a million trades. It's those handful of trades that really change who you are as a trader long term. So anyway, let's get into Scan for the week ahead. As always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. Main watches for this week, there's 4 main ones. That's really where my main focus is going to be. SOUN has been a fantastic trader. Rivian's been a fantastic trader. Lucid, as well as the last one is QS, which has been setting up pretty well. The one big mistake that I made in COVID was kind of thinking that these things have run up too much too soon and not really giving them the ability to have the wings and break out and continue to squeeze and do all those things. I lost a lot first before I made a whole bunch. And that was something that I had to kind of unlearn in COVID to be able to then become, or at least be able to take advantage of the opportunities that were in front of me. So the reason I say that is because I want to have an open mind as this market heats up again. This could just be the start of the next 3 or 6 month type of bull run. We don't necessarily know. So I want to be open-minded about it and not be all bearish about this move doesn't make sense and there's all this delusion. No, all that matters is the trend right now, especially on these big moves. IWM, like I said, huge breakout. We haven't had in a long time. So speculation is going to be at an all-time high. So SOUN, higher the better. Ideally, 650 exhaustion, some sort of parabolic move. For me, this is not like small caps, getting short and then trying to let these things just completely unwind. For me, it's about, nailing this particular parabolic opportunity and then covering into the flush. The only time I would be patient is if it's heavy versus the VWAP level and let that thing work. Otherwise, don't fight it. Same thing like Rivian. Rivian and Lucid was great on Friday for opportunities later in the day, but I wasted a lot of time, especially on Rivian. Lucid was good. I started in. It didn't really set up. I wasn't fighting it. I wasn't going to step in front of it and scale. We did have one scaling opportunity after the exhaustion move, and then 407 for me was the key. anytime we flush under a key level, that is an auto cover for me, especially if I was early on the starter and I've scaled into that trade, covered into that flush, comes back, starts to grind again, and I went ahead and moved on. Rivian was, I gave a little bit more time. Great setup, great levels we discussed, but it never had any failed follow through momentum that actually stuck. 1810 was the level that I had used for the room and for, kind of staying safe. But, I had some great covers there, but I quickly went back in and started to kind of scale in on this trade. And as it started to grind, I said, you know what? I'm exchanging my time here instead of going to the beach and enjoying summer and all that kind of stuff. I'll wait. I don't need to force this trade. The market's so good right now. You just need to wait for these trades to come to you. You don't need to be trying to force the trade to come to you, right? Just wait for it. It will come and it should feel right. And this one didn't feel right. So I went ahead and moved on with that trade. Obviously the setup came and nice flush later on. But you know what? That's fine. I missed it and it's all good. But anyway, we got QS, we got Lucid, we got Rivian, and we have SOUN. That's going to be my main focuses, off the open. I'm sure, we might have something with DJT. Obviously, this thing honestly might open, 50, 60. It really might. But we'll see. Hopefully it only opens like maybe 40 or 35, fades off, and then I can get long for some sort of breakout. But I do think that this could have legs. Failed follow through kind of momentum. I'd be looking for KZIA rather. This was a nice one that was a short versus the 110 level for me that I had posted. This TOYO was fantastic. Another nice failed follow through setup. But for me, we weren't making new lows after 11 a.m. And this one flush ended up basically coming right back and reclaiming. So anytime that happens and we start to hold that prior level after a flush, that's hands off for me. And so, as I had said around that 240 level, I was done with the trade for fear of the fact that this thing could swipe back up in the end of the day. And obviously it just kind of grinded back, but I did have that fear that it could. So I do think that there's a lot of shorts that are still there. So I am cautiously optimistic, but I have it on failed follow through. If it gaps up, I'd look for 280, 290 clear out and then fade back. 240s for me is the level of patience. If we start to base at 240 the next couple days, that to me, it's starting to become a liquidity trap that's worth kind of watching. Zap, I think, is just rotating through the rest of the covers. So we'll see what happens with that. But 1140s was a pretty key level. And last but not least, continuation side of things. App should not be a surprise to anybody. That was a clear long trade versus one. Posted the entry, posted the game plan. I have since sold 2/3. SMR, I have continuation just because I'm not crazy short bias, but between this one and EBS, at some point, we're going to have a huge, huge unwind opportunity. Now, does that mean that, we should be, shorting it, expecting it to fade? Absolutely not. It could parabolic, could continue to go. Does that mean that, why not just get long while it breaks out? I'm just not comfortable chasing this, and so it's easier in hindsight to see that each day it's higher and higher, but you don't have that information at the beginning of the day, right? So you can't sit there and pretend like, oh, I should have just got long and just go straight up. So for me, the edge is going to be when it either parabolics or when it starts to slide naturally. And you can kind of see, RTX is a good example. If you go back and check out this day on 624 or, maybe I think it was 710 or something, but you can kind of see the days that it slides, the days that they're going to have some sell, right? And those are the days that I want to focus on. And so that, like this right here, doesn't mean that it's going to be down long term. I'm not suggesting that SMR can't go to 20 or 25. I just want to take advantage of that day that it unwinds, just like we had over here. Same kind of situation, same kind of thought process, right? And then we had OKYO, which I have a small position in as a potential liquidity trap that starts, or at least some sort of trend shift. And then we have CMND, and this one, no position yet, but I'm going to be looking potentially versus 150. It feels like the type that maybe could go 2 to 3 if it's got some PRs that support it. Little liquidity trap, kind of transitional day here, 76 million. It's been holding since. So if it starts to build over 180 versus that 150 level, that interests me. But stuff like this IVP, I'm just not interested. It's just at some point, maybe a couple thousand shares. But to me, the amount of attention that you have to put on this trade versus something like a Rivian, an SOUN, a Lucid, a QS, any of those, you're going to make 10 times more with way less risk versus something like this where, good luck. I mean, sure, maybe you score big, but it's just not a high conviction trade for me. And for me at this point in my career in trading, I just want, less stress, less headaches, focus on the ones that give you the best opportunities. So again, that is Scan for today. I hope at some point I want to do some videos and recaps, kind of like old Tandem Trader style. But that's just a wish list item maybe later on. I enjoy doing them personally. But so far I'm really happy with how things have been progressing. I hope you guys are content and happy with it as well. But I love seeing, some other people kind of take charge and share their visions, share their ideas, and, never stop learning. You never know when you're going to be able to use, what you take from these different people. So at any rate, again, Avidity Fitness, like I said, there's a sign up. If you guys do it, 18 out of 24 sessions, $500 to Traders for a Cause. Traders for a Cause tickets are up for grabs. Annual Investors Underground's up for grabs. A month of Icon Meals is up for grabs. So I'm hoping that we get a bunch of you guys that are interested. Look, day one is better than one day. So I hope to see you guys show up. Again, Small Cap Summer has been off to an amazing start. I hope you guys are doing exceptionally well. And that's it. Catch you guys in the room tomorrow.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.